Afternoon, it's Brian Shannon from Alphatrends.net. Today's Friday, the 30th of March, 2012, end of the day, week, month, quarter, and it was a real good quarter for equities. We can see the percentages here year to date, 12% for the SPY, almost 21% for the Nasdaq. Financials were up 21.5%. So broad-based rally for the equities. The only thing we had down was the dollar, and anyways, this week was kind of choppy a little bit, but we did end higher. The one exception there being oil, which we'll take a look at shortly. Let's take a look at the charts here, and the charts are brought to you by Realtick. Realtick is the sponsor of this show each Friday, so take a look at Realtick.com, and you can see the various brokers that offer Realtick as an option for the platform. It's a great trading platform and analysis tool as well. So take a look at Realtick.com. This S&P 500, we're still obviously in this uptrend, which not only hits these two spots, but is where we have that 50-day moving average. This week, what we saw was a test of the 20-day moving average, and it bounced almost perfectly from there yesterday. That's something I pointed out on a blog and put a little post about the psychology of those what happens around a moving average. As I was mentioning to subscribers yesterday, it's kind of interesting that I got so much good feedback about that simple little paragraph because it's something I talk about a lot, which is the action of what takes place with the supply and demand at a key level such as a moving average. And this week, of course, again, it was a 20-day moving average that we saw holding up. So on the S&P 500, if we back it up let's back it up just a little bit further here. We'll go back to, let's make it 90 days here on the 65-minute time frame. That way we can encompass the entire rally here that actually began last November. And here's that trend line, and that's what we're talking about, is where the 50-day moving average would be found. We can also take a look at a trend line that looks like this. And the key here, I think, though, is this, the lows for this week, which were hit yesterday, and just below it, actually, right at about 138.5. So if this S&P 500 can maintain above about 138.5, that's prior level of resistance, this general area. So we could say realistically it's not always a specific number, but basically this 138 to 138.5, that's going to be key for next week. If we can continue to hold above that, well, we have to continue to be able to give the benefit of it out to the buyers over the intermediate term, and it still looks on the weekly time frame as though this market wants to head up towards about the 143.5 to 144 level, which was supported in 2007, which turned into resistance in 2008. So that's the bigger picture, potential upside that we still have. Of course, there's no saying that that's going to be resistance, but that's a potential target for us. We'll just stay focused on, can the market maintain above this support level? If it does that, then generally speaking, stocks are going to do well in here. Obviously, if they're already in an uptrend. And anyways, let's take a look now at the Nasdaq. The Qs were down 13 pennies today, but again, for the week they had a decent week. And here's the longer term trend line for the Nasdaq, and you can see that's not touching on the 50-day moving average the way the S&P 500 is, but instead on the 20-day moving average. And it wasn't the 20-day moving average that was important in the Nasdaq this week. Instead, you can see that red line, that's the 10-day moving average. So when we drill down a little bit to a 65-minute time frame, we can see that with a little bit more clarity. And here we can see that trend as well. And 65-minute time frame, just as a reminder, I use that because we've got 6 equal lengths of time for the trading session of 65 minutes. If you use hourly or 60-minute candles, then you've got a 30-minute candle at the beginning of the day from 9:30 to 10, and then you have 60-minute candles. So to make it 65 minutes keeps it more precise, I guess, and just more accurate. We're giving equal weighting to each period of time. The Qs, again, they hit the 10-day moving average. So this week's lows near about 67.20 will be important. But also, if we drop below that, I don't think it's a big deal. We could drop down to 66, 66 and a half, and this is the band that should be support. Now the markets are, maybe slowing down a little bit and getting a little bit choppy here. So that could be a warning sign that perhaps we're going to pull back. But again, we just don't see the technical evidence of it yet. Until we see a pattern of lower highs and lower lows and broken important support levels and moving averages heading lower, the buyers will remain in control of this market as they are still in the Russell 2000. And the Russell 2000, let's take a look again at that chart. The Russell 2000 for the week was up 0.16%, and it was down a little bit here today. It keeps trying to get back above that 83 level, and now this is about the third time third separate occasion that we've kind of poked up through it. One, two, and then today up through it. Today's high was 83.60, and then came back into that range. So it's having a difficult time with this 83 level. It's not just continuing up to the next level. So we've got to look at this as not necessarily distribution, but just general. Correction through time here maybe rather than price. But if we get a move back down towards the bottom end of the range at 81 and then break down through it, then I think we could see bigger selling, because that's also where we find that 50-day moving average right now as well. The exact level of that is 81.62. So the 50-day moving average is coming up. I wouldn't be surprised to see that we break down below the 50-day moving average, but because it's still in an uptrend, I don't think it would be anything to be concerned about. Let's talk about oil for a moment real quick, because I had mentioned that one. I didn't want to forget it. Oil was down here, broke through some support this week. So as consumers, that's a good thing, obviously. And we had broken the uptrend line from back in October. So this longer-term uptrend line has been broken. Longer term meaning 6 months. It doesn't mean the trend is down now, or that it's entering a bear market. But we did break below this prior resistance too that was looking like an inverted head and shoulders pattern. So this is looking like a failed breakout of an inverted head and shoulders pattern. So that's good to see. Perhaps oil will continue to drift lower. I think that if it's going to be back into an uptrend, we're going to need it to get above and hold above at least about 104.75. So above 104.75 on a closing basis next week. But this level of prior support should turn into resistance. So if it continues to hold below that, that's good for consumers, obviously. Let's talk a minute about bonds for a moment as well. Not the TBT, but the TLT. This is the 20-year average, and you can see here that the support was broken in here about 2 weeks ago, and that support broken, the market has rallied up to it and is now being rejected. So of course that's going to have the inverse effect on yields. This is a 10-year bond, government bond note index, and the yield on it basically 2.2%. So we had it rally sharply a couple weeks ago. It drifted back down to prior resistance, and now could be heading back up for another test in this area. So those are just some other markets to just kind of be aware of once in a while. The semiconductors were up today and had a decent week as well. The semiconductors held their key level of support just about 35.15. If we break below 35.15 next week, then I think we want to become more defensive. This has been a pretty important level here over the last couple months. Resistance, then turning into support in this general area. So back below $35 a share, 35.10, we could see a little bit of selling in there, perhaps down to the rising 50-day moving average, which is about 34.5. But again, there's no evidence that these markets are breaking down. The worst you could say is they're turning sideways, and they have us on a little bit of cautiousness. And they have had us on cautiousness last week when they gapped down, but then recovered very nicely. The financials still in a range that we had seen since the beginning of the week, which is $15.5 to $16, and that we're right in the middle of that range. That 5-day moving average just completely flattened out. So intermediate term, if we break below 1550, then the financials could be seeing a little bit further selling. That's also where we see 1543, that 20-day moving average, which is rising as well. But if we're to break below 1550 and hold below it for more than a half hour or so, I think we could see a quick move down towards the $15 level. That's where we'd seen this prior resistance. That's where we have this trend line, and that's where that 50-day moving average is going to come up and meet this market as well. So a little bit of just cautiousness next week. Obviously, trade what you're trading, meaning if you're trading, Green Mountain Coffee Roasters, be aware of the trend in Green Mountain Coffee Roasters. Don't necessarily look for the market to lead it. Trade, what it is that you're trading in particular, if that made sense. I didn't end that too well. But anyways, have a good weekend, and I'll talk to you next week. Thank you.